Okay, we are back. Let me just see here. Yeah, oh, look. It nicely respected the line. I know this my line is arbitrary, but we are trying to use price action to determine where the contractions are and then draw the lines based off of that. It was pretty close, right? So it bounced off of this line. It's sort of respecting it. This might actually mean that this is a downtrend forming. So we have a big red day, and then this one is struggling. Well, it's sort of holding right here, but it's struggling to push. We'll see what the New York session does. It might be a new trend down based off of Trade ATS pattern. They also look for these gaps here. So if I make a little rectangle here, you know, called fair value gaps. And if this happens, this is the first confirmation of a change in direction. As long as they keep making gaps in the same direction, like here, and then a gap here, it's all going in the same direction. This one didn't hold this gap. It broke it. So we might be seeing a reversal. Who knows? Maybe this day just pushes above. By the end we close. I don't know. But as for now, if this line holds, we might be looking at a downtrend. Having said that, this little nice pushback is also struggling to push beyond this line that we had on first expansion leg, where it topped out and reversed, bounced from the center, went up to this line, respected it, bounced a little bit, and now it's struggling to break this one. I'm gonna watch this a little bit, and I would like to, in the previous video I said that I wouldn't want to buy here because it's too close while it was going up. But now that I'm seeing a rejection and a pullback, and if we hold this line, this is a strong indication that we might actually respect it and go further. So once we are close to here, I will add a little bit to this position. Not a lot, 0.05. So we'll have a quarter of a lot here, just to push the price. I think it will go something like here, just to push the price a little bit lower, and then hope for the best. One of the things in the master pattern, when we open trades, we try to say this is a downtrend, for example. What we want to do is we want to open trades above or below the contraction. So if this is a downtrend, we would be trying to sell as much as above this contraction point as we can. So if we had entered here for a sell, that would be a very good spot. What Trade ATS says about this strategy, mind you, this is like a Wyckoff redistribution and accumulation pattern. The master pattern is based off of the Wyckoff stuff. So this has been around for quite a while. I didn't invent this. ATS didn't invent this. They even say that in their own videos. They did not invent these patterns, the strategy, but just refined the existing stuff around Wyckoff. So what they say is, if you open a trade, and this is, oh, by the way, I noticed that when I do things, I see some windows appear near my cursor, but you don't see in the video because I am just recording the one window. I'll try to change this. Oh, wow, it's getting quite wild. I'll try to change this and record my entire screen for the future videos so that you see these little drop downs that you can't see right now that I'm showing. Anyway, I digress. So if you open a trade here, they say the distance from where it turned to the contraction point is likely to be the distance that it might continue. So the stop loss would be the same distance. So let's say I open a buy here, and all the way to the contraction it's 50 pips. So I would put my stop loss 50 pips down over here. Same thing. If we open a sell here, it's 66 to the center. I usually like to go up to the first line of the box. So this is 56, and then 56 there would be the stop loss here. Just a note. Oh, we are approaching. See, it's starting to react. Let's see if it breaks. Oh yeah. Okay. The volume is high. I always try to watch the size of the candle. Oh yeah, I'm going in. 25. Yes, as expected, push the price a little bit down. And now I'm gonna push my stop loss a little bit up, just to keep my loss the same, 35-ish euro. And yeah, this looks good. It bounced off of this previous high. It's making a pullback, respecting the center. It's going up, respecting this line, making a pullback, respecting this, and then hopefully we might see a rally. We might not. It might go like this all the way to stop loss. I don't know. Nobody knows what the banks will do. The big institutions that move price. See, they have to move the price. If you go take a look at ATS, Trade ATS. So imagine you want to enter, like, we don't care. For example, if I want to open 10 lots here, and this is a simulated account, I just place an order, it's filled, right? So, but if the big institution wants to enter and they have like $1 billion entry, they can't just open the position. They need liquidity. So they are looking for certain liquidity. People who went short here, you know, the guys chasing the trends, the FOMO and everything, the people that opened here, they have stop losses somewhere around, or in the entirety of this block, right? So all of this would be stop losses of some sort. And stop losses are market orders, right? So stop losses basically eat up whatever is in the limit orders. So let's say hypothetically, if the banks have all of these filled with shorts, but limit shorts, then stop losses from these guys that went short here, these would actually be market buys, buying into the shorts from the big institution. So all they have to do is push the price a little bit, and then the stop losses do the same. Now, I'm not talking about what's the word? My brain again. You know, they are hunting your stops like retail stops. No, they are hunting the stops of weaker players. So if there's a central bank, then a normal bank is the weak player. Basically, anyone who is trapped in a position is the weak player. So central banks against central banks against investment banks, and so on, all the way down to retail, like you and me, which are pretty insignificant with the sizes we play with, and so on. But still, liquidity is liquidity. If there's 20 million retail traders each having $20,000 accounts, you do the math. Yeah, that's a lot of liquidity. So we basically did what they did. So they pushed the price down. Liquidity was here. Someone who went long here or here probably has stops somewhere around, you know, this area here. So we pushed the price to take these stop losses, this liquidity, and then maybe continue. Who knows? Maybe we go all the way down to take this liquidity as well from people who went long here or here or here or here, whatever. And there would be stop losses somewhere here. When we enter positions, we try to do our best to place the position where the other people's stop loss would be. And that's it. I think that's it for this trade. I'm sorry, for this video. No reason for me to keep recording and looking at the price action. I won't be editing this, so I can't fast forward, nor can I make videos longer than 15 minutes, because YouTube is having issues with verifying. They can't send a text. It just says cannot send message to this phone number, and it's basically been, this bug has been around for a while. A lot of people can't verify accounts for some reason. I've tried multiple numbers, multiple carriers, nothing worked. So I'll just keep these videos short, and we'll see how it goes. If anything changes drastically, I will record another video. If not, I will come back tomorrow, and I'll see you there. Take care.